This morning on BRN, the October effect. Joining me now to discuss this, Jane King is a financial journalist, and she's joining us from the NASDAQ. Jane, thanks for joining us on the program this morning.
Thanks, Jeffrey. Good to be here.
Always a pleasure. And hey, Jane, I don't know if you know, but it's now October, and there's something in the stock market called the October effect, and I wanted to chat with you about it. First, what is the October effect?
Yeah. Well, it's kind of this spooky superstition that October is bad for stocks. And in fact, and I think it really stems from, of course, Black Monday was October, and the crash in 1929 did happen in October. So October kind of got this reputation as being the month where the big crashes happen.
Uh,
But I've been around the markets for it's like 25 years now. And I tend to see, like, yes, October can be kind of scary, but I've seen big drops in July, I've seen big drops in March. And so it's kind of hard to really pin that on it. But I don't know, there still seems to be this kind of superstition. There's a lot of superstitions around Wall Street. There's one around October still.
Yeah, and look, I mean, I lived through the panic or the market quote unquote crash of '87. How old was I? I was probably 15 when that happened, but I remember it. And I remember I was not around for the stock market crash in '29. But look, Jane, I mean, you can cherry pick. I can go. First of all, the Romans, I think, came up with the calendar that we're using. So blame the Romans on having
July for Julius Caesar.
right. We'll blame the Romans, the ancient Romans, not the current Romans, for the months, etc. But you can go through any point in the market for historically, and I could point to some trends. I mean, I think that's kind of the balance. I mean, you can look back, and I kind of look at it like Nostradamus, or I forget when you kind of look back and say, oh, this quatrain predicted that this was 9/11 was going to happen or something's going to happen. I think it's kind of back reverse engineering, in my opinion.
Yeah, 2020 hindsight is like perfect, right? So yeah, when you look, but there's actually been some studies done on this, and really, what is the October effect? So Yardeni is one of those. They say since 1928, the S&P 500 has actually gained value more often in October than it has declined. And
Yeah.
if you average it all out, October actually has a small gain in terms of just the overall average. Now, CFRA says October is 35% more volatile than average, and it kind of has this reputation as September is historically the worst month of the year for the stock market. Didn't happen this year. We got that big rate cut. China had big stimulus, so we had a positive month of September. But the general consensus was September was the worst month, but it was like a gradual decline, and then we get our big drops in October. But then we'll see what October holds this year. But another thing is, like, especially since 1987, course 29, we have these curbs in the market. So once they reach a certain percentage loss, then they halt the market for a period of time and then resume trading. Just kind of calm everything down a little bit and prevent that herd instinct. We didn't have those in the previous stock market crashes. They came into play during the pandemic in March of 2020, when we saw the Dow down 3,000 points in one day. We saw those curbs came in place. Don't see them too much, but that's one thing that slows down those big one-day drops.
Jay, let's talk a little bit about technology. Technology has really altered the way we consume information. So would my thesis, I'm going to offer up my thesis and you shoot it down, that in today's environment with social media and Reddit and all these other platforms that are really driving, I would say, meme stocks and investor frenzy, does that make volatility possible and market drops anytime of the year? So it's not, it could happen. We have GameStop, right? We had AMC, right? Those were examples where the market just hit certain stocks and dropped. So does technology alter this October effect so that it's every month effect?
It's all the time. You have to watch it. So yeah, I agree. I think, something we've seen fake things be out on X, for example, and it'll impact the market. And then somebody comes in. So I think the bottom line is don't try to time the market. It's just It's just almost impossible to do. I know very, very, very few good traders, and you just kind of stick in and maybe use September and October to add to some positions, put a little more money in, and don't get scared because it does tend to pay off if you stay in over the long term.
Yeah, really good advice. Jane King, always great to see you. Thanks for joining us, and we look forward to seeing you again next week.
Okay, see you later.
And don't forget to subscribe to our daily newsletter, The Morning Pulse, for all the news in one place. Details at our website. And we're back again tomorrow for another edition of BRN. Until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes.